Good morning. Good morning. This is the Patriot Radio News Hour. You've got Jason solo today. Joe's taking a trip to Thailand. How's that? he's out for the day. You guys can figure it out. Joe needs days off pretty soon. I'm going to have some days off, but we have the holidays coming, so I kind of lean on those days to take some days off. Joe and I are trying to iron out the details as to what days we'll be doing shows and what days we won't be doing shows, but you better believe Thanksgiving we won't be on the air. We are a gold and silver company. Joe comes in, and he's been doing a lights-out job the last couple of months. Some days in the past he gives me a lot more time on the air, and sometimes he's just on a roll, and there's been so much economic news that he does, I would say, 90% of the talking on this first hour. The half-empty cup of Joe is a little more of my environment, but he's out today, and I've got some stuff. I have a lot of stuff I want to talk about, but then I found some clips, and I found two really good clips, and one's going to take up pretty much the entire second segment. It's just going to pound home bank closures and the commercial real estate problems. It's a great clip, so that's going to be the second segment, and we'll cover some other things. I've got something about the Janet Yellen. I've many times I've been on the air on various shows on KHNC talking about, hey, it's Donald Trump, or it's Joe Biden, or it's Barack Obama, or you get these, Jerome Powell, or you got Janet Yellen. These are just figureheads. And on another clip later in the show, I want to talk about and I always mess this up, the Treasury borrowing. It's basically bankers that tell the Secretary of the Treasury what to do. Unnamed bankers, and it's a committee, and they essentially, Janet Yellen could take all the credit she wants, but I think she was a really good figurehead as a Fed chief. She's a figurehead as the Treasury Secretary, and if you're a good figurehead, you get these big jobs. You get the prestige, but you also get to take the blame when things go bad. But I got a clip talking about what's really going on with these interest rates and why they, they're blasting off. Then suddenly they drop back, and Joe covers a lot of that really well. But I have this guy RJ Talks. He's a YouTuber that I listen to. I'm going to play some of that later in the show. So, but first and foremost, the phone number, the way that you buy and secure yourself larger stacks of gold and silver. The phone number is 800-951-0592, and this is how you buy your metals. And the Treasury Borrowing Advisory Committee. I don't even know how Jack knows this. He usually falls asleep during the first hour, so he must be keeping up with what I'm going to be doing here later in the hour. It's the Treasury Borrowing Advisory Committee. Jack is helping Dad out here to make sure I sound a little more coherent. But hey, the number you call for gold and silver, I'll say this. I didn't get a chance to cover it in the last couple of days, but Joe and I talked earlier in the week, and we have verification. We have some customers out there, and I know that the paycheck to paycheck guys and the guys that save up a little bit at a time and the metals programs people, we love all the small customers. And right now, the small customers, there's just not very many of them. It shows you how tight everything is with the inflation. But we have verification. We know that we have many of our customers that are holding large amounts of money, and they are not buying gold. They're waiting for, I guess, to see if it goes lower, or maybe later next year, early next year, maybe it goes lower. The clip I'm going to play in the next segment kind of tells you maybe you don't want to do that. Maybe you can save a few bucks. Maybe if you really think gold's going to go down a little bit here when the markets start to go down. But maybe it's just better to have it in your possession because deposits and transactions in the banking system, accounts being closed, all of this stuff that we talk about, which is just in its infancy, is going to heat up. And I'll say this, we're all inside a great, huge religion, right? It's the most successful religion in human history. I'm going to show you, for all the viewers that get to watch this later, it's hold up that $20 bill. The Federal Reserve note. It is the most successful religion in human history. And why do I say that? Because It only has value because the people that use it, and every country in the world uses dollars, has faith in its value. And more people have used Federal Reserve notes than any of the most common religions that are practiced across the world. And with that in mind, you're a part of a cult, essentially. I'm a part of the cult. I have to spend these things. I've met the guys that are outside the system, the sovereign citizens, the ones that denounce their birth certificate and social security card and try to live off-grid. And unfortunately, that's not where we're at. That might have been what you could do in America 150 years ago, but you can't do that nowadays. There's a system in place. And so I'm a part of it. I have to spend these things. But that doesn't mean everything I've got has to be what's in my account or some stack of cash at home. I make sure that my savings is protected for the games that the financiers of the world play, and that's gold and silver. We had some specials yesterday. I'm going to go ahead and start with the specials now. I'm going to talk about the specials later. I'm going to keep with the specials that we had yesterday. I'm going to heat up the 10th ounce, though, a little bit. We had 10th ounce gold eagles. I'm going to show you. I got a customer that bought a couple of those yesterday. But, yeah, you can see them. Yeah, there's a couple. There's an obverse and a reverse. It has the eagle on the back for the new ones and Liberty walking. But, yeah, they're gold dimes, 1/10 ounce of gold, and a tube. And here's what a tube looks like. I kept the lead loose, but a tube has got 50 of them in there. So 5 ounces of gold. Obviously, the premiums on fractional gold is higher, but I'm going to keep the price. Gold's down about $12 today. I'm going to keep the price at $250 each for individual coins, but if you buy 50 or more, I'm going to give a substantially bigger savings, and I'm going to have $240 each, $240 each if you buy a tube of 50 or more. It's time to get on top of this gold and silver, guys. I wouldn't wait for ups or downs. It's time to just get out of the funny money religion of Federal Reserve notes. Welcome back. 800-951-0592. Yeah, 10th ounce gold eagles, 50 or more. Get the tube, the full tube, as you see on the your Rumble channel or your YouTube channel if you want to catch the show later. $240 each for 50 or more. If you want single coins, $250 each. We sold some of those yesterday. We got some more today. 800-951-0592. I'm going to play this. The Epic Economist. This guy covers economic news on a YouTube channel. He's got the real dramatic voice. He's pretty fun to listen to. But he's going to cover a variety of things from bank closures to account closures to the commercial backed securities, the commercial loans, stuff that we've been talking about. But it's good to hear it from another angle. Let's listen in, and we'll talk a little more gold and silver on the next segment.
Your money might be taking longer to show up in your bank account.
The biggest banks in the United States are reporting widespread bank outages for a 6th consecutive day. At the same time, another bank just collapsed, marking the 5th bank failure of 2023. Since last Friday, system-wide processing errors have been leaving millions of customers without access to their money. And while companies insist this is just a temporary glitch, Bloomberg reports that several institutions are still under threat, and experts say more failures would be unsurprising at this point. Americans are outraged with the situation. The outages are keeping many people from paying their bills on time, making them accrue interest debt while they wait for their deposits. On Monday, the Federal Reserve released an alert about the problem, which confirmed that a national processor of transactions is having difficulty in accessing customers' data to complete the transactions. The statement raised suspicion that the disruption was caused by a cyber attack, but up until this point, there is no official explanation about the root cause of the issue. In the past few days, several major U.S. banks released statements on the matter. On Friday, Bank of America, U.S. Bank, and Chase Bank warned clients that the deposit delays would last for just a couple of hours. Your accounts remain secure, and your balance will be updated as soon as the deposit is received, Bank of America wrote on its online platform. You do not need to take any action. Truist also made a similar statement to its customers. Some deposits and payments may be delayed due to a processing issue. This affects Truist and other banks. We're working on this, and we will refund any resulting fees. After realizing that the delays were extending for much longer, angry customers vented on social media platforms about the bank outages. These problems are becoming more frequent. TikTok, hate to say, but the system is cracking. One person wrote on X, formerly Twitter. Another person wrote, "This is beyond frustrating. It causes renters to have late fees. Why is it happening?" Responding to a customer who said, "Wells Fargo direct deposit is officially a day late, and customer service has no time frame when the money will come." A Wells Fargo employee has said, "I noticed your tweet. We are aware of the issue, and we're working on a resolution. We apologize for the inconvenience. At this time, there's no need to file a claim." On Tuesday, X account Finance a Lot noted that the bank issues were a technical glitch with the Federal Reserve System, and that it will take time to work through the backlog. At least that's the story right now, it's stressed. Another X user wrote to ask Wells Fargo, "Woke up to my staff about to jump me, cause direct deposits broke on payday and winter bonus day. Thanks, Wells Fargo and Chase." Now, 6 days after the system-wide disruptions began, clients have been...
Yeah, you know, and I'll add to this because part of what I think is going on, I think we're going to start seeing more and more of these disruptions to payment schedules, because the central bank currency, which will be more and more relevant as time goes on, I think instead of one big throw of the switch, I think this is going to slowly be put into place. And I think a lot of these banks slowly paying your payments is going to be, hey, look at how inconvenient these bank accounts are and these bank payments. And man, if you just switch over to this central bank CBDC, you know, the Fed coin, if you just switch over to Fed coin, it's going to be so much easier for you. And so I think through the rest of this year, and especially next year, we're going to start to see a lot more of you out there having problems switching your money over, which is why I'm telling you, if you're going to move some into gold, maybe waiting until next year is not a good idea. But let's listen to a little more.
Deposit delays, but other distressing issues with transfers, duplicated withdrawals, and more. Some say that they haven't been able to log into their online accounts for days. Wells Fargo and Bank of America started directing customer complaints to the Clearinghouse, the payments company that operates the only private sector automated clearinghouse system in the U.S. Clearinghouse is a banking association and payments company owned by the largest commercial banks in the United States. The Automated Clearinghouse, or ACH, is the backbone of the electronic funds transfer system that U.S. banks and other institutions rely on to process online payments. The Federal Reserve revealed on its website that the processing issue at the Clearinghouse had resulted in a number of ACH entries having certain data elements obscured. As a result, those items were not able to be processed by receiving depository financial institutions. In an email to CBS, the operator explained that ACH payment instructions were sent to banks on November the 2nd with masked customer names and account numbers due to a flaw in the system. Because the banks need that data to process incoming payments and to post the money to customer accounts, those payments were delayed, it added. Meanwhile, the Consumer Financial Protection Bureau said it is closely monitoring how institutions are responding to the problem. This disruption underscores the importance of the nation's payments infrastructure. Consumers affected by this processing error should not be penalized, whether by overdraft fees, late fees, or any other penalties. Affected consumers can submit a complaint by visiting consumerfinance.gov/complaint, the agency added. It seems that Bank of America and Wells Fargo clients are being particularly hard hit by the outages. Down Detector reported that the bank's customers were still experiencing issues with funds transfers, online banking, and retrieving account balances today. At Bank of America, day 4, and still no direct deposit, no update on potential resolution, or at the very least, what's being done to resolve the issue. No transparency, no assistance, no communication from you at all. Nothing. Wow, this is so bizarre, one person wrote on X on Monday morning. At Bank of America, where is my money? And will you be covering my bills that are due today? Another person wrote. A frustrated Wells Fargo customer said, Wells Fargo did not post direct deposits into accounts. Paychecks missing and no answers. This is theft. At Ruben Gallego, what government agency can we contact for assistance?
Gee, this just gives me lots of confidence hearing all these people having trouble with their accounts. And if it's, it's like the old saying, if it's happening to somebody else, it's just a matter of time before it happens to you. Once again, do you really want to have your money in these institutions right now or in the future?
Though the situation has gotten some media attention, the truth is that since mid-October, financial institutions have been silently facing operational issues. On October the 20th, international bank Barclays reported an outage that hit more than 2.5 million people globally. The institution's online banking platform locked customers out of their accounts, and given that the bank only offers online services in many countries, clients pointed out that in-branch banking was not an option, highlighting the importance of having cash holdings on hand. Since 2015, nearly 6,000 Barclays branches have been closed. The same has happened to Wells Fargo, Citibank, Chase, and U.S. Bank in the past few years. These institutions also announced thousands of closings last month. Experts say that the payment processing outages reveal that tech integration remains an issue in the industry, and the consequences of compliance failure continues to be severe. Instability continues to grow in the U.S. banking sector, and multiple vulnerabilities are leaving hundreds of institutions under a near-term threat of funding pressure and capital shortfalls, according to a new Bloomberg report citing data provided by Federal Reserve Bank of New York staff. The risks to the system are rising, they said. While some large institutions are less exposed to capital shortfalls, an analysis of models through the second quarter of 2023 showed that hundreds of regional banks are in danger of running out of funds. The March 2023 banking crisis highlighted the vulnerability of the banking sector to a sudden rise in interest rates, the analysts noted. Specifically, banks' ability to limit the pass-through of rate hiking cycles into deposit rates allows them to benefit from higher rates, but only gradually. For smaller banks, rising interest rates have only aggravated their woes. That's the case with Iowa-based Citizens Bank, the fifth financial institution that collapsed this year. In a news release, regulators with the Iowa Division of Banking said Citizens Bank was declared insolvent earlier this week when bank examiners identified significant loan losses that had not previously been identified by the bank. They said that the bank had made a concentration of loans to a single industry, which the company's CEO acknowledged was trucking, outside its Sac City territory and outside Iowa, and incurred heavy losses on some of those loans.
And keep in mind, this bank closed just in the last week. He just said it, but just to highlight it, we had those banks closed in March, but then, another one here, and it just takes a couple of dominoes to fall, and this gets more severe as the Epic economist is talking about.
The failure was triggered by bankruptcies in the trucking sector amid a nationwide freight recession. Kurt Hoff, a longtime banker in Iowa, who's now a professor of practice in finance at Iowa State University, noted that the last available report on Citizens Bank, dated September 30, showed it had charged off nearly $4 million in loans while earning just $400,000 to $500,000 in income over the past fiscal year. They didn't have enough capital to cover the losses, he said. High interest rates are also endangering banks that have higher exposure to consumer debt, mortgage, and commercial real estate loans. The latest quarterly report on household debt and credit by the Federal Reserve of New York showed that total household debt increased by a whopping $228 billion in the third quarter of 2023 to $17.29 trillion. Meanwhile, mortgage balances rose by $126 billion from the previous quarter and stood at $12.14 trillion at the end of September. Credit card balances also increased by $48 billion to $1.08 trillion in quarter three, representing a 4.7% quarterly increase. Moreover, auto loan and student loan balances went up by $13 billion and $30 billion respectively. Other expenses, which include retail cards and other consumer loans, increased by $2 billion. On the other hand, the rate of loan delinquencies and defaults is rising at the fastest pace since 2008. Many banks are already facing steep losses.
We're going to hit the break here in a minute. I might do a little bit more of this on the next segment, but as you can hear, every sector seems to be worse and worse. And the bank closed down because of the freight. People aren't shipping stuff. Well, it's probably because people can't afford to buy stuff. Stay with us. This is the Patriot Radio News Hour. Jason, I'll be right back. Welcome back. The Patriot Radio News Hour. The number to call is 800-951-0592. I'm going to get into this gold special again. I want to thank Private Citizen Herb. I didn't know that Joe was going on a trip to Thailand this morning, so I was just trying to figure out what kind of a show I wanted to put together, and then this clip was just sent. I get clips sent to me all the time, and this one just fell in my lap. It's really good. It kind of backs up what we've been saying, Joe and I, the last I'd say the rest of pretty much all of 2023, which is debt is at highest levels ever. Commercial-backed loans are really toxic right now. The higher interest rates are just killing markets, and we have a rapidly changing world economy that's getting it's getting ahead of everybody. It's harder and harder to save money. I remember Joe, I think it was earlier this week, talking about these 10th-ounce gold eagles, $30 or something like that. I mean, I wasn't buying gold back then. I've been buying gold for a while, but it's not like I've been buying it since I was a little kid. I was a little late coming to this too in a lot of ways, but I learned really fast. And those guys that could buy 10th-ounce gold eagles, it was $30 or $50. They're holding on to something that we're selling today for $250, and that's a special price. $250 for a 10th-ounce gold eagle, 1 through 49. I'm going to really heat up. If you want to buy more, you want to buy in bulk, a full tube, which I could show you one more time on the video. That's what it looks, very tight tube. I always keep the lid a little off. These lids are so tight on here. When you get your tube, they seal tight. It's a pretty cool product. 50 of them in the tube, $240 each for 50 or more. So if you buy 2 tubes, 3 tubes, however many you want to buy. And I always feel for the guys that have less money to buy the silver and gold. Because I was there. It's not like I could buy huge amounts now, even today, but I can afford to buy more than I used to. So I feel for you guys. So buying one of those, essentially, it's about the same price as a roll of silver quarters. It's kind of in that frame, a roll of silver halves. So you can buy one of these and accomplish what you need to accomplish, which is putting some of your money out of the funny money system and putting it in gold and silver. But as I was saying earlier, Joe and I know that there's some guys out there that are sitting on the sidelines with large amounts of money, retirement money, bank accounts, savings accounts, sitting there with a lot of extra money. And when you hear that the banking system at any time it can just stop you from processing. I had one customer recently. It took us 3 attempts to get her money into the bank because the bank was giving her some hassles. Okay, and this is an older lady, and she has the money. It was there, and they just simply didn't want to. She wanted to use her card, and they just told her, "You're not going to use your card for this purchase." And we actually tried to shrink the payment down to a smaller payment. And she was on the phone with her bank. She said they told her, "Yeah, you can use $7,500. That's what we'll allow you to use on that card. So we went back, tried to charge it, and they said, no, thank you. So this and many more situations are going to be happening. They're going to make banking very, very intrusive. They're very hard, very difficult, because they're going to roll in their FedNow, their Fed coin. And as they push that more and more, they're going to, look how convenient it is. There's not going to be any waiting. It's just going to be so wonderful. And it's how they're going to push people into a much more less private and more taxed. I mean, let's face it, inflation is a tax, and we got more of that coming. No matter what anyone says, and even if the inflation goes away here for a little bit, I think it's going to up a little bit. I think it's going to go away, but then I think it's going to come back in a major way. You just look at the 1970s. It went down, it went up, it went down, it went up, and it was hard. All the way into the early 80s, people were having trouble with it. So it is a cult. More people practice the religion of the Federal Reserve Note than any other religion in human history. It's all based on faith. And I don't know about you listening out there. My faith was blown a long time ago. And obviously, since we have to spend these dollars, the Federal Reserve Note is that's our exchange, whether it be digital or physical paper money. You have to have your bill paying money. You got to pay your rent or your mortgage. You got to pay your energy bills. You got to, if you're someone that likes to use the card at the grocery store, you got to have that money in there. It's a currency. It's an exchange. That's fine. Leave that money in. I'm not saying take your rent money and put it in gold and then and try to sell it back to us when you need the rent money. That's not going to work. This is for savings that you're going to hold on to. If you have money that you're going to hold on to, I would say 12 months or longer, especially if it's more than 12 months. If you have money sitting in a savings account, and you think, well, I might need access to it in 2 years. Put it in gold. Put it in gold and silver. There's going to be so much that's going to happen in the next 2 years. You're going to be so happy because here's the thing: is people that were buying gold in 2020, 2021, if they're selling it back to us, they're essentially getting the same money back. It hasn't gone up a tremendous amount to where they can make a ton of money back. But here's the thing: if you spent in 2020, let's say, I don't know, 20 grand on some gold, and it's 2023, and it's like, well, I can give you about 20 grand for it, right? You give me, you haven't really made anything. You made a lot, actually, because while that person bought it in 2020 and the inflation went wild in 2021, 2022, 2023. That 20 grand sitting in that bank account got eroded tremendously. I would just estimate about $6,000 of purchasing power has been lost in those 3 years. So you only have $14,000 of purchasing power. Where at least if you left it in the gold, 20 grand spent in 2020, you sell it back to us today. If you need it for some reason, I would suggest, hey, hold on to it for another year or two. We're going to pay you a lot more than 20 grand in a year or 2 years. But if you need it, you need it. And so some of the guys that are coming in selling to us are like, I wish I could have made more off this. Well, maybe what they should be looking at is how much they protected what was already sitting there. So buy these 10,000 gold eagles. Get as many as you could possibly get your hands on. 800-951-0592 is the number. And I don't know. I always forget who the girls that are. I know Brittany is there today. I always forget if it's Arlene or our new girl Kathy, or if they're all three there. But they'll handle the phone calls. They'll handle your purchase. It'll be very easy when you call the number. They'll tell you how. I always hear Joe's pitch. It's really good. It's very simple. You just tell them you want the special. The second question is going to be, well, how many do you want? And they'll set you up the invoice. If it's somebody in Colorado, yeah, I'll get the invoice. Once I have the product in my hand, I call you into Fort Lupton for an appointment here in our new office. You get to sit down and talk to me. I'm the one that handles the appointments here. In Arizona, you get to talk to Arlene or Brittany, whoever has taken the appointments there. But 800-951-0592. I got another clip I'm going to play on the next segment. Stay with us. Patriot Radio News Hour. The phone number is 800-951-0592 to get yourself some cheap 10th ounce gold eagles, especially if you want to buy the full tube. You can save quite a bit trying to get some people to get out of the cult of the funny Federal Reserve notes that you have sitting in those bank accounts. I'm going to tempt you as hard as I can to move some of that out now. $240 each for 50 or more. But if $250 for one of these is not a bad price. That's a good price. 800-951-0592 951-0592. I'm going to get into this RJ Talks clip really quickly. I just find it funny when you get to hear the Treasury Borrowing Advisory Committee. This is the group of nameless people that tell Janet Yellen what to do. Let's listen in. This is pretty good. It's RJ Talks. Something weird is happening with interest rates, and the Treasury's fingerprints are all over it.
All right, we have more changes unfolding in the U.S. economy and over at the United States Treasury. Changes that saw a sudden and quite profound crash in interest rates. Rates across the board have been falling. Bond markets feeling the whiplash of traders covering their shorts. And why is that? What has changed? Well, we have some answers after the shadowy, low-profile group of banksters who advised Treasury. The TBAC released their Treasury recommendations report last week, and we have a copy of it, something that you're going to want to see because it answers what just happened to yields this past week and why it happened. Realize this report was written before yields began falling. It was written for Janet Yellen, for Treasury, as a guide for how to stop the run-up in interest rates, how to help them buy themselves some time. I'll tell you, there's always more than meets the eye. But before we get started, press the like button and consider subscribing. It helps me out, helps out the channel, and I appreciate your support. So the Department of the U.S. Treasury, folks, run by Janet Yellen, President Biden's hand-picked Treasury Secretary, the person who is technically responsible for collecting all of our taxes as the IRS falls under the purview of the department, managing the nation's debt as well, and paying all of our country's bills. Someone who has proven herself to be inadequate for the position, which you'll see why in a minute. But in reality, Janet Yellen is just a front man, a front woman, a public face, and nothing more. The people who actually decide Treasury policy or technically advise the clueless leadership team over there at the Treasury is a small, shadowy group of people, a low-profile group of banksters called the Treasury Borrowing Advisory Committee, also known as TBAC. They're the people who are pulling the strings. And we know this because of the report that they just released saying as much, warning Janet Yellen and the leadership team over there at Treasury that the level of borrowing, or technically the consistent increased coupon size of their auctions, are a problem, and gave her a blueprint how to stop interest rates from rising, stop term premium from rising, and it appears that she followed their instructions, folks, or their advice to the letter. Now, before we look at this, as there's a few lines in particular that you really need to see that all but explain what just happened this past week, what caused the drop in interest rates. But first, why does the government care? Why are they against higher interest rates? Realize, we're not talking about the Federal Reserve here. We're talking about the U.S. government. Two different things, right? The Fed wants higher for longer. The Treasury, on the other hand, has a completely different goal. Their objective, last week at least, was to stop bond yields from surging. But why was that? Because they can't afford it. Take a look at this. Our national debt sitting at $33.6 trillion right now, which is more, by the way, than the combined GDPs of Japan, Germany, India, and China combined. A month ago, we crossed $33 trillion in debt, and since then, we've borrowed another $600 billion. This is where we are right now, today. Well, according to the Congressional Budget Office, look where we're headed, folks. By 2033, in 10 years, the CBO projects we'll add an additional $20 trillion to our debt load, bringing.
And I'll say this, if the way things have been going over the last 20 years, there's no way it's just going to be $20 trillion in 10 years. You can double that, but he's being conservative for my taste.
Us to over $53 trillion. Now, if that's not bad enough, something else happened over the last 18 months that has a lot of people worried about our fiscal sanity. Not only Wall Street, who, by the way, has been putting fiscal excess at the top of their risk calculations recently. For example, take a listen to one of the best traders of all time, hedge fund titan Stanley Druckenmiller, worth over $6 billion. Take a listen to his take on this. Here he is.
What can you do with a dollar?
Got a little ad coming in. Hang on one second.
You there?
I'm here. Can you hear me, Joe? Jack? Hello?
Yeah,
Did you lose me,
dropped
Jack?
off for a second, but I think we're back now.
Oh, okay. I'll drop back. I don't know what happened there. I think let's do this. I'm gonna go back to the beginning of this, the Drunken Miller clip and see how far I can get before the break. Here we go.
Take a listen to his take on this. Here he is.
We're not hearing the clip.
Okay, so it's not coming through.
No.
I don't know why, because the other clip was working just fine, and this one's not. So, well, let me. So you heard the first part of the clip, right, Jack? That came through.
A little bit, yeah, but now nothing.
The first 4 minutes with RJ talks, that was coming through.
Yes.
Okay. Well, we're gonna hit the break. Let's. Unfortunately, I was really wanting to get this in. We'll see how much I could fit in on the last short segment. But once again, 800-951-0592. Got one more short segment before we're done for the week. We'll hold those prices for 10,000 Gold Eagles through the weekend. So I guess you got some time for it, but there is a limited amount. So I would go ahead and call in as soon as possible. I'll be right back. Patriot Radio. 800-951-0592, the number to call to buy gold and silver from the Patriot Trading Group. I find it funny because I say that number as many times as I can. Joe says it. And I always find it kind of humorous when people are like, hey, Jason, I want to buy some gold. You know, what number do I call? I'm like, well, 800-951-0592. I'll tell you this. If you're a gold customer of Patriot Trading Group, most of you have cell phones. Just put it in there. But, we ought to be one of your contacts. Just like your auto mechanic or anybody else that does a service for you in your home, you should have us there to where you just look up PTG or Patriot Trading Group. Just click on it, call in, and tell them how many of these 10,000 Gold Eagles you want today. They're $250 a piece. If you buy 50 or more, they're $240 a piece. Tremendous sale on the big end of it. I suggest getting your money out of the banking system and putting it in this. I'm going to try to play a little bit more of. I'm going to try to get RJ's reaction to Stan Druckenmiller. Joe is listening from Thailand. I'm sure he was wanting to hear this, but something happened with the clip. Let me play about a minute or two of this before we send off for the weekend.
And that's not just a one-off, folks. Wall Street in general has been growing more and more concerned with fiscal excess, this unsustainable path that we're clearly on. It puts their returns at risk, which is why they're worried about it. We saw it translate to Fitch downgrading U.S. debt a few months ago. Well, after the recent surge in interest rates, it got government's attention as well. For starters, this TBAC group, the Treasury Borrowing Advisory Committee, who spelled it out for Janet Yellen and the clueless economists at the Treasury 2 weeks ago, before yields started falling and before Treasury released their Q4 borrowing plan. And what was it that caught their attention? The cost of servicing this debt, folks, exploded after the Treasury's most recent auction size increase. Remember, we spoke about that last week in a video. The Treasury released their Q4 borrowing plan to borrow over $1.5 trillion this quarter in Q4 and Q1 of next year, an absolute insane amount of money. Well, that's not free to do. Just like all of us normal folk have to pay interest on our debt, 29% APR on credit cards right now, well, the government does as well. Take a look at this.
Yeah, we're going to hit the end of the show, but it's interesting when making the case, and we're going to start hearing more of this in the future. You're going to hear Joe bring this up in the months to come, more and more, that the federal government, the Treasury, wants something different than what the Fed wants. You have fiscal versus monetary policy. The fiscal policy, that's what the government is the fiscal policy. The monetary policy, that's the Fed. And those two usually are in line and trying to help each other out. Well, right now, those two things are clashing. And that's not a good sign for what's getting ready to happen financially in the world. So it's going to be a big, rocky road. And as financially the world starts to turn very black, you're going to see attention on wars, attention on the funny election going on next year. they're going to point fingers at every single thing they can as to why you can't financially make ends meet. And hey banker, just as the song earlier in the show, it's their fault. And they're enriching themselves off this. So take a few bucks out of their system. Get out a little bit out of that cult. Get a little bit out of their religion. Put a few dollars in gold and silver, and watch as everything unfolds in the next months and years to come. Because I'll tell you right now, the gold customers I meet with in the years I've been doing this are very relaxed, calm people. Yes, they don't like what's going on, but there's only so much we can do to change fiscal policy. 800-951-0592. Joe and Jason, I think Joe's short trip to Thailand will be done by Monday. We'll see, and I'll be back on Monday. Stay tuned. The Happy Become a Joe, Glenn Tate, is actually going to make it on the air with us. He's been a very busy dude, but switch on over to 1360khnc.com and listen in.